CEO Carlos Tavares noted that the strong focus by employees on operational excellence and synergies execution led to achieving very strong H1 financial results.
The American auto market is on fire again, and this time, it's not because of EVs or inflation. Jeep and Ram have just detonated a bombshell that's sending shockwaves through Detroit, Wall Street, and dealership lots nationwide. What they've just done could completely change how trucks and SUVs are sold in America, and it's already sparking chaos across the entire industry. For years, Jeep and Ram were seen as the backbone of Stellantis, rugged, American-made brands with loyal followings. But behind the scenes, both brands have been under massive pressure. Sales have been slipping, inventories have been piling up, and customers have been walking away from $70,000 SUVs and $80,000 trucks. So Stellantis decided to flip the script. What they've done now has Ford, GM, and even Toyota scrambling to respond. Let's start with Jeep. The once iconic off-road brand known for adventure and freedom just made a drastic move. Jeep has quietly slashed prices on several of its most popular models by thousands of dollars. The Wrangler, Grand Cherokee, and Compass are seeing discounts so steep that dealerships are calling it a price reset. Some trims are being offered with rebates of up to $12,000, something unheard of for Jeep. It's a clear signal Stellantis knows that the American consumer is tapped out. At the same time, Ram has gone nuclear in the truck segment. Facing declining demand and growing competition from GM and Ford's discounts, Ram has now unleashed massive price drops on its 1500 lineup, bringing prices down to levels not seen in nearly a decade. Some dealerships are advertising brand new Ram 1500s for under $40,000, and that's with luxury-level interiors and V8 power. It's not just a marketing gimmick, it's survival mode. The timing couldn't be more explosive. Across the country, dealer lots are overflowing with unsold vehicles. The average truck now takes more than 90 days to sell, up from just 35 days a few years ago. Interest rates remain sky high, and the average new car payment is now over $750 a month. Consumers are walking away, automakers are slashing output, and Jeep and Ram just threw gasoline on the fire. By cutting prices this aggressively, Stellantis isn't just chasing sales, they're rewriting the rules. Ford's F-150 and GM's Silverado have long been the kings of the truck world, but now they're under siege. Ford's incentives are already ballooning, with discounts approaching $10,000 on certain trims just to stay competitive. GM, too, is offering unheard-of financing deals, including 0% APR on some trucks. But the problem is, they can't keep this up forever. Jeep and Ram's move could trigger a domino effect. When one major automaker slashes prices, others are forced to follow or risk losing market share. This is the same playbook Tesla used to dominate the EV market, except now, it's happening in America's most profitable segment, trucks and SUVs. The result? Profit margins across the industry are collapsing, and analysts are warning that automakers could be headed for a brutal earnings season. But Stellantis seems to be playing the long game. They know that while Ford and GM are spending billions on EVs, Stellantis can swoop in with cheaper, more traditional gas-powered vehicles that Americans still actually want and can afford. The average buyer doesn't want to pay $70,000 for a pickup with features they don't need. They want something reliable, affordable, and built to last. Jeep and Ram just gave them exactly that. And here's where things get even more interesting. Stellantis isn't stopping there. Behind closed doors, reports say the company is planning to revamp its entire US lineup, cutting underperforming trims, simplifying options, and aggressively localizing production to reduce costs. That means cheaper vehicles, faster delivery times, and fewer headaches for dealers. But it also means massive layoffs and factory shakeups could be on the horizon. Meanwhile, automakers like Toyota, Honda, and Hyundai are watching closely. Because if Jeep and Ram succeed with this aggressive strategy, the entire industry might have to follow. The luxury pricing era could be over. Automakers who built their business on massive profit margins may be forced to compete in a new reality, one defined by affordability, not prestige. And that's where the real meltdown begins. As prices fall, used car values are starting to crash too. People who bought trucks during the pandemic for $70,000 are now seeing them worth $20,000 less in just a couple of years. Dealers are sitting on aging inventory, banks are tightening auto loans, and the resale market is tanking. What started as a bold move by Stellantis might trigger a market correction unlike anything we've seen since 2008. And that's the ticking time bomb nobody in the industry wants to talk about. The used car collapse doesn't just hurt consumers, it devastates automakers' financing arms. Companies like Ford Credit, GM Financial, and Stellantis' own lending divisions are sitting on billions in vehicle loans that are rapidly losing collateral value. When truck prices fall this fast, every repo, every lease return, and every trade-in becomes a financial disaster. Dealers can't sell them for what they owe, and banks are quietly panicking. At the same time, production lines that were once running non-stop are slowing down. Stellantis has already announced temporary shutdowns at multiple plants due to excess inventory. Ford and GM are doing the same, quietly throttling output to keep supply in check. But the problem is, it's already too late. The lot floods started months ago. Trucks and SUVs are stacking up like never before, and the market is choking on its own inventory. What's even crazier is how fast consumer behavior is shifting. Just 2 years ago, people were paying $10,000 over sticker price for a new truck. Now, buyers are walking into dealerships expecting $10,000 off, and they're getting it. The balance of power has completely flipped. Automakers went from calling the shots to begging customers to take the keys. This kind of swing doesn't happen without consequences, and Jeep's situation reveals exactly why Stellantis made this desperate pivot. The brand's identity, rugged, adventurous, premium, has backfired in an economy where buyers are hunting for value. The Grand Cherokee and Wagoneer were supposed to be Jeep's ticket into luxury territory. Instead, they've become anchors, dragging sales down. Dealers are sitting on thousands of unsold high-trim models, and Stellantis knows it. That's why the new focus is clear. Cut prices, move units, and reclaim relevance. Ram's story is similar, but even more explosive. Once celebrated for its comfort and performance, the Ram 1500 has now become Stellantis' battlefield weapon. Insiders say the company plans to roll out an ultra-low-cost trim level in 2025, a workhorse edition priced to undercut both the F-150 and Silverado by thousands. It's a direct challenge to Detroit's profit centers. If Ram pulls it off, it could force Ford and GM into an all-out price war that could erase billions in profits overnight. Meanwhile, the EV side of the story is unraveling too. Stellantis isn't rushing headfirst into electrification like Ford or GM, and that's turning out to be a smart move. EV inventories are piling up across the country, and dealers are begging for relief. Ford has had to slash prices on the F-150 Lightning multiple times, and GM delayed its electric truck rollout entirely. Jeep and Ram, on the other hand, are doubling down on hybrid systems and efficient gas engines, technologies that actually sell in the current economy. And Wall Street is starting to notice. Analysts are calling Stellantis' play counter-cyclical genius. By refusing to follow the EV hype train too far, they've positioned themselves to dominate the combustion market while everyone else scrambles to make up for EV losses. Still, it's a dangerous gamble, because if this pricing strategy fails, Stellantis could burn through cash faster than anyone expects. But from the looks of it, the numbers don't lie. Dealership foot traffic for Jeep and Ram has surged in the past month while rival brands are seeing sharp declines. The word is spreading fast among buyers. Jeep and Ram are suddenly affordable again. For the first time in years, working-class Americans are walking onto lots and realizing they can actually afford a new truck or SUV without going broke. That psychological shift alone could reshape the entire market dynamic. And it's not just about price. Stellantis is also leveraging something Ford and GM have struggled with: simplicity. The new ordering systems being rolled out across Jeep and Ram dealerships are streamlining production. Fewer trims, fewer options, faster builds. Dealers can finally stock what customers actually want instead of guessing 6 months ahead. It's a strategy designed for a volatile economy, and it might just save Stellantis from the same chaos crushing its competitors. But even as Stellantis starts gaining momentum, storm clouds are forming above the entire auto sector. The unions are restless, factory layoffs are creeping up, and suppliers are warning of major slowdowns. Inflation might be cooling, but the damage to consumer confidence is already done. Families who once dreamed of a new truck every 5 years are holding onto their vehicles for a decade or longer. If this continues, the auto market could face a deeper structural collapse, one that no discount can fix. And this is where things get really dangerous for the entire US auto ecosystem. When customers stop trading in, the entire machine grinds to a halt. Dealerships rely on a steady flow of trade-ins to fuel used car sales. Banks depend on new loans to generate revenue. And automakers count on constant turnover to keep factories running. Now, all three are starting to stall. Lenders are tightening approvals, dealers are cutting staff, and automakers are quietly bracing for a wave of plant shutdowns heading into 2026. For Stellantis, this chaos might actually be their opportunity. While Ford and GM scramble to balance expensive EV programs with crumbling truck profits, Stellantis is pivoting toward survival, playing offense while everyone else defends. They're building cheaper models, cutting production costs, and targeting middle-class Americans who feel completely abandoned by other automakers. The company's leadership has even said it outright. The future isn't luxury, it's accessibility. And that's a message that's resonating across small towns and rural America. Jeep is also planning something unprecedented to reconnect with its roots. Leaks from within Stellantis suggest that a modern retro Jeep lineup could be in the works, a return to simple, durable, no-nonsense vehicles built for real use, not just style. Think old-school Cherokee or Liberty designs with today's efficiency and safety. If Jeep pulls that off while keeping prices low, it could reignite the brand's fading image and put serious pressure on rivals like Toyota's 4Runner and Ford's Bronco. Meanwhile, Ram is taking a completely different approach, focusing on power and performance without the premium price tag. Engineers have reportedly been developing a next-generation Hemi replacement that combines hybrid efficiency with traditional muscle. The goal? Deliver a truck that can tow, haul, and perform while still undercutting Ford's Power Boost and GM's Turbo lineup by thousands. It's a direct challenge to the overinflated tech truck era. Ram is betting that the average American doesn't want a tablet on wheels. They want something that works. But while Stellantis is busy fighting to regain its footing, other automakers are feeling the squeeze. Ford's F-150 sales are slipping, and the Lightning's inventory is ballooning faster than they can move it. GM's Silverado discounts are eating into profits, and their EV rollout delays are frustrating investors. Even Toyota, the world's most stable automaker, is starting to offer deeper incentives in the US, a rare move that signals just how weak the consumer market has become. And here's the twist no one saw coming. Fleet buyers are joining the retreat too. Rental companies, construction firms, and government agencies, once reliable bulk buyers, are cutting orders in half. They're extending leases instead of replacing vehicles, waiting for prices to fall further. This puts even more pressure on automakers to keep slashing prices just to move metal. The cycle feeds itself. The more prices drop, the more consumers wait. The more they wait, the worse the oversupply becomes. And that's exactly how markets spiral into full-blown meltdowns. The last time something like this happened was during the 2008 financial crisis, when automakers were forced into government bailouts. But this time, it's different. There's no credit crunch, no housing bubble. It's pure affordability collapse. Americans simply can't justify these sky-high car prices anymore, not when groceries, rent, and utilities are already draining their wallets. Jeep and Ram's drastic price cuts are just the first cracks in a much bigger dam. And once it breaks, the ripple effect could sweep through every corner of the auto industry, from luxury brands to used car auctions. Still, there's a sense that Stellantis saw this coming before anyone else. Their leadership, especially CEO Carlos Tavares, has been warning for years that automakers are pricing themselves out of reach for normal people. He called it a social risk, and now that risk is playing out in real time. Jeep and Ram's strategy might look desperate on the surface, but it's actually a calculated attempt to survive the storm that's about to hit everyone else even harder. And as the data rolls in, it's clear something big is shifting. Inventory levels across the country are breaking records, dealer incentives are skyrocketing, and consumer confidence in the auto market has plunged to its lowest level in over a decade. If these trends continue, we might be witnessing the start of the largest price correction in modern automotive history. And the deeper you look, the clearer it becomes. This isn't just an auto industry slump. It's a total realignment of what Americans value when it comes to cars and trucks. The days of paying $75,000 for a pickup with leather seats, massage functions, and 6 screens are fading fast. People are done with paying luxury prices for basic utility. The pendulum is swinging back toward practicality, and Jeep and Ram are riding that wave perfectly. Across rural America, dealerships that were ghost towns a year ago are suddenly buzzing again. Buyers who had given up on the idea of owning a new vehicle are showing up with trade-ins ready to sign, because finally, prices make sense again. It's almost like Stellantis tapped into the nostalgia of the early 2000s, when trucks were still tools, not status symbols. And that emotional shift is powerful. It's making other automakers nervous. Behind closed doors, executives at Ford, GM, and even Toyota are reportedly meeting daily to figure out how to respond. They can't afford to trigger a full-scale price war, but they also can't ignore what's happening. Every week, Stellantis' discounts continue. Their market share inches upward. For the first time in a decade, Ram could overtake the Silverado in U.S. sales. Jeep could reclaim lost ground from Toyota's SUV lineup. It's a quiet revolution that's starting to look like a repeat of the 1970s, but in reverse. Back then, Americans turned to small, cheap imports when Detroit's prices ballooned. Now, Stellantis might be giving buyers a reason to come back to American brands. But here's the dark side no one's talking about. This level of price cutting comes with consequences. Dealership profits are evaporating. Many stores rely heavily on financing and add-ons to survive, but as vehicles get cheaper, so do margins. Some dealers are already warning that they might not make it through 2026 if this trend continues. And Stellantis knows that. But for them, survival at the corporate level means sacrificing short-term dealer profits for long-term market dominance. It's a ruthless but strategic move. And the supply chain isn't immune either. Parts suppliers who built entire businesses around inflated component prices are now struggling to adjust. When automakers slash sticker prices, every supplier down the line feels the squeeze. Steel, plastics, electronics, logistics. It's all connected. The result is a ripple effect that could cause smaller manufacturers to collapse, triggering another wave of layoffs across the Midwest. The economic consequences are spreading far beyond the assembly lines. States that depend on auto production, Michigan, Ohio, Indiana, are bracing for potential job losses if output continues to shrink. Meanwhile, local economies that once thrived on truck sales, dealers, repair shops, and even car accessory businesses are reporting sharp declines. When trucks don't move, neither does the economy around them. And while all of this chaos unfolds, there's another storyline developing in the background. The rise of foreign automakers quietly capitalizing on the confusion. Brands like Hyundai, Kia, and even Chinese newcomers are eyeing the gap Stellantis is creating. By undercutting prices and offering longer warranties, they're trying to capture frustrated American buyers looking for value. The difference this time is that Stellantis isn't standing still. They're fighting back aggressively with pricing, heritage, and domestic appeal. But the bigger question is, how long can they sustain it? Price cuts can spark momentum, but they can also drain profits fast. If sales don't scale up enough to offset those discounts, Stellantis could be heading into a financial storm of its own making. Already, some analysts are warning that this meltdown strategy could backfire, turning the short-term sales boom into a long-term profitability crisis. Yet, others believe Stellantis has no choice, because the American consumer is fundamentally different now. The pandemic, inflation, and years of corporate greed have reshaped buying behavior. People want transparency. They want simplicity. They want cars that make sense again. Jeep and Ram's bold shift might be the first step in a wider awakening, forcing the entire auto industry to finally face reality. And if Stellantis pulls this off, it won't just be a win for Jeep and Ram. It could spark a new golden era of affordable American vehicles, something the industry desperately needs. But if it fails, the collapse could drag down every automaker trying to chase them. The next 6 months will decide which future we get. So, as the dust settles, one thing is crystal clear. Jeep and Ram just changed the rules of the game. What started as a desperate move to move metal has now become a defining moment for the entire US auto industry. Prices are falling, profits are shrinking, and the market is being forced to confront a reality it's been ignoring for years. Americans are done overpaying for vehicles that no longer fit their lives or their wallets. Stellantis saw the storm coming and flipped the script before anyone else dared to. Whether this gamble pays off or ignites an all-out industry meltdown, one thing's for sure: nothing will be the same again. The age of sky-high markups and luxury price tags is dying, and a new era of affordability is being born right before our eyes. So buckle up, because the next chapter of the American auto story is going to be wild. Will Jeep and Ram's gamble spark a revolution or a collapse? Only time will tell. But one thing's for certain: every automaker in America just got the wake-up call they've been dreading. Thanks for watching. If you found this video insightful, make sure to hit that like button, subscribe for more deep dives into the changing auto industry, and let us know in the comments. Do you think Jeep and Ram just saved the American car market? Or did they just start its biggest crash ever?